Special situation investing actually is a very interesting investment strategy. So in this video, I want to talk about mastering special situation strategies for profiting from market events. Special situation investing is a strategy that focuses on identifying and capitalizing on unique, often temporary opportunities that arise from specific corporate events or situations. And these situations can lead to significant price movements and create investment opportunities that are not always visible in the broader markets. So let's look at key types of special situations. Number one is merger arbitrage. Merger arbitrage. And this involves investing in companies involved in mergers or acquisitions. This strategy involves buying the stock of the target company and potentially shorting the stocks of the acquiring companies. If you're involved in this kind of operation, you will need to buy the stocks of the company that is about to be acquired. And if you are a short seller, you short the stock of uh, the stocks of the acquiring company. So it's very, very interesting, of course, and I think it's an area that is worth studying. You could develop a skills in it, and then you see how you can benefit from this kind of investing. So number two is spin-offs. Spin-offs here is investing in companies that are spinning off a subsidiary or a division into a separate entity. The spin-offs often create value and can be undervalued by the market initially. Some companies, maybe they are too big, they want to cut down on the number of subsidiaries, may decide to spin off or separate a subsidiary from the main company. So initially when they do that, the price is always generally very cheap. It's good for people who want to buy cheap into a company, and that would eventually guarantee them a result at the end of the day. Very important indeed. And it's something that one could choose to benefit from, actually, if you can really target that. I know many years back, I think UBA, the UBA, the bank, they spin off United Capital many years back, and it was done at a very low price, actually around either or this 7 naira or less than that. Now United Capital is about 15 naira, something of that nature. So it was a spin-off from UBA. See, and you equally have restructuring. So investing in companies undergoing significant restructuring, including bankruptcy, reorganization, or major strategic changes which may unlock value. Usually when a company is undergoing a kind of change, restructuring with the aim of unlocking value, with the aim of bringing out the best in the company, make it more profitable. If you invest in that particular company at that instance, if the exercise proves to be successful, you stand to benefit maximally at the end of the day. You equally have activist investing. This involves investing in companies where an activist investor is pushing for changes such as restructuring, management change, or a strategic shift. It is aimed at unlocking value in the company. You want to equally take into consideration the advantages as well as disadvantages of this strategy. Let's look at the benefits. The benefit number one here is potential for high returns. Special situation can offer substantial returns if the market reaction to the event is favorable. If the market accepts the restructuring, the change, then of course the company will do very well and the investors will start to benefit. Number two is unique opportunities. Target specific, often niche often niche situation that may not be fully understood or priced in by the broader market. You tend to like uncover opportunities that the broader market, for one reason or the other, is not able to uncover because of the niche nature of the company. You have event driven. This is a kind of event driven investments. So it focuses on events that can lead to price volatility, creating potential opportunities for well researched investors. When you do your, when you conduct your due diligence and adequately, critically, you research the company very well, you can discover these opportunities that will then enhance your investment returns. Let's equally look at the risks, the pitfalls, the drawbacks, the disadvantages of this strategy. Actually, there's what is called event risk. The outcome of special situation can be uncertain and may not always, play out as expected. There's no guarantee that all things will work out as expected. So number two is complexity. It requires in-depth research and understanding of the specific situation and its potential impact on the investment. You must understand the situation involved, very well, and be able to determine the impact it will have, in the overall performance of the company. So it's very complex. It's somewhat complicated. Number three is the market volatility. The stock involved in special situation can be highly volatile, especially around the time of the events. It can be very volatile, particularly when the event is kind of ongoing. So example of this strategy includes arbitrage, taking advantage of price discrepancy in merger or acquisition scenario. This is called, arbitrage. When you take opportunity of advantage of what happens whenever a company wants to acquire another company, that price discrepancy, you could, you harness that to make profit. There's, post spin-off analysis, investing in new independent companies that result from spin-offs and analyzing their potential value. Usually, whenever the company is spin off, you analyze the company critically, which I did when United Capital was spun off from UBA, but unfortunately, I did not invest in it to the best of my knowledge, but I did analysis actually. So there is that distressed asset investing in distressed companies or assets with the expectation that their value will recover, or be realized through restructuring. So it's a very, very important strategy you could adopt, particularly when it comes to spin-offs. Generally, they used to perform very well. Just target the company that is spun off, give it time, then of course, all things being equal, the company will grow, will do well, and you get to profit maximally as an investor.